Are Roth IRA distributions taxable? Or said another way, is the money that I take out of my Roth IRA taxed? Well, it could be if you don't follow two very specific rules, and we're going to get into that today on the Your Financial EKG channel. My name is Drew Blackston. I'm a certified retirement counselor, investment advisor representative, and I am your virtual financial advisor, helping you get to retirement, helping you get through retirement, and protecting your ability to stay in retirement. Now today, I'm going to protect your ability to not pay taxes on a Roth IRA distribution, because you got to follow two very specific rules, and those rules need to be followed to the T, or yes, you will pay penalties and taxes on the money you take out of your Roth IRA. Now, at the end of this video, I'm going to give you specific steps that you can take to not pay taxes on your Roth IRA if you fall under age 59 and a half, or if you need your money sooner than you thought. So let's talk about the first very specific rule, and that is called the 5-year rule. Now, the 5-year rule means that for your very first Roth IRA contribution, you must let the earnings sit in that account for 5 years before you can take it out without taxes or penalty. Now, if you put $6,000 into your Roth IRA today, and a year from now you need $6,000, you can take out your contribution. But if that $6,000 grows to $12,000, you cannot touch the earnings on that Roth IRA for 5 years. You can always get your contribution back out. You've already paid the taxes on that money, but you cannot get the earnings out for 5 years. That doesn't matter if you are 25 or 125. If you do a IRA to Roth IRA conversion, or you do a Roth IRA contribution, the 5-year rule must be satisfied before you take out any earnings. So that's rule number 1. The second rule that you want to follow with a Roth IRA is that you must be over the age of 59 and a half to take out your earnings without penalty. Okay, now if you're under the age of 59 and a half and you need your money out of your Roth IRA, remember, you can take your contribution, but you cannot take your earnings even if you satisfied the 5-year rule. Now, once you're over the age of 59 and a half, if you've satisfied the 5-year rule, then you can take out whatever you want from your Roth IRA, and it is 100% tax free. So you need to make sure you understand the 5-year rule, and you need to make sure you understand what the age 59 and a half before you start taking out income from your Roth IRA. Now, let me give you 1, 2, 3, 4, 5 ways that you can get money out of your Roth IRA under the age of 59 and a half within the 5-year rule and not pay taxes or penalties. You ready? Let me erase this real quick. Okay, the first way that you can get money out of your Roth IRA under the age of 59 and a half and within the 5-year rule is what they call a first-time home purchase. So if it's your first time purchasing a home, you're allowed to get up to $10,000 out of your Roth IRA if you're under the age of 59 and a half, if you haven't satisfied the 5-year rule, and do this without penalty, okay? Now, the second way that you can get money out of your Roth IRA if you're under the age of 59 and a half and you haven't satisfied the 5-year rule is for qualified, if I could spell, education expenses. So if you were to go back to college and you wanted to use your money, your Roth IRA money for that, maybe you want to get your nursing degree, whatever, you can use that money under the age of 59 and a half, outside of the 5-year rule period, and you're not going to pay a penalty for doing that. If you use your Roth IRA for what they call a qualified birth or adoption expenses, then you don't pay a penalty if you're under the age of 59 and a half and you're within the 5-year rule, okay? The fourth way, this is the way we don't want to do it, is if you're disabled or you pass away. Obviously, if you pass away, you're not going to use your Roth IRA anyway. But your beneficiaries, they get it tax-free and the 5-year rule goes away. If you're disabled, you can go after that Roth IRA for income no matter what. Okay, and the fifth way, let me move my eraser. The fifth way is what they call unreimbursed, gosh, they got some big words here, medical expenses. And you're unemployed. So if you're unemployed, you get sick, and you have unreimbursed medical expenses, then you can use your Roth IRA if you're under the age of 59 and a half and you're within the 5-year rule to pay for those medical expenses and not pay a penalty for taking out the earnings. Let me be clear. All of this is just the earnings. You're allowed to get your contribution out no matter what. Day 1, day 30, year 30. But it's the earnings. So if you bought Apple stock in your Roth IRA today for $172 a share and it goes to $500 and you're within that 5-year rule, you can only go after what you originally bought the Apple stock for, not the earnings of the Apple stock, just your contribution. After the 5-year rule, after you're over the age of 59 and a half, you can get all of it, go to Vegas, do whatever you want. Okay, so hopefully this has helped answer the questions. Are Roth IRA distributions taxed? How are they taxed? And how are ways that we can get around Roth IRA distributions being taxed and penalized? Now, if you want to talk about this more specifically, go to my website, yourfinancialekg.com. Download my free booklet. It's actually in the comments section called The Roadmap to Retirement. That will help you understand retirement income, but it also gives you a way to get in touch with me, and we can talk about Roth IRAs for you. Now, as always, make sure you talk to your CPA, your accountant, your financial advisor, or call me, and we can go through your Roth IRA options. Thank you so much for watching. I hope you have a very blessed day. God bless. Bye-bye.